Welcome to this deep dive. And we're going to be decoding market moves using this system called VSQC, or volume squeeze candles.
Yeah.
And it's all based on some pretty interesting stuff, right? We have actual code from the Hoffman suite,
Right.
VSQC heat map, and then plus insights from the Rubik's Cube Algo masterclass.
It's really fascinating how much information is hidden in plain sight,
Right.
especially in the financial markets. And today we're going to try to equip you with, a new way of looking at things so you can spot potential opportunities and more importantly, understand the logic behind them.
Yeah, that's exactly what I'm hoping to get out of this because, VSQC takes all of this complicated market data, price action, volume, momentum, and presents it sort of like a heat map. The hotter the color, the stronger the signal or something like that. But I'm curious as to how that actually works in practice.
Well, think about it like this. If you showed a scrambled Rubik's Cube to someone, who knows how to solve it? They'd immediately see patterns and know the moves to make.
Right.
VSQC does something similar for traders. It helps them visualize market dynamics and spot potential setups.
And from looking at the code, there's this lickback setting. And the developer recommends a default of 9, saying that's based on tons of testing. So I wonder, what makes that number so significant?
That's a great question. And it highlights how much is going on beneath the surface with VSQC. There are VWMA calculations, linear regression, dynamic EMA smoothing, all these complex mathematical processes working behind the scenes to provide real-time, zero-lag signals.
Zero lag. So you're seeing the market as it happens, which would give you a huge advantage.
Exactly. Most indicators lag behind price action, but VSQC aims to give you that instantaneous view so you can react to changes in momentum as they occur.
Speaking of momentum, the Rubik's Cube Algo masterclass calls volume the heartbeat of the market, often foreshadowing major price moves. How does VSQC tap into that?
Well, imagine a crowded hallway. If you suddenly see a bunch of people rushing in one direction, you'd assume something's going on, right? Volume is similar. A surge in trading activity often precedes significant price changes.
Right, and VSQC is designed to detect these unusual volume spikes, which the masterclass suggests could even be the footprints of institutional investors. Those big players who can really move the market. That's something I definitely want to be able to spot.
It's like being able to see the undercurrents of the market. But VSQC goes beyond just highlighting volume. It uses color to represent buying and selling pressure. Green for buying, red for selling.
Right.
And the intensity of the color indicates the strength of that pressure.
And I'm looking at the code, I see terms like vivid, plain, dim, even hollow, each signifying a different level of volume and moment. But it's almost like VSQC is painting a picture of the market's mood swings, which is a much easier way to process all that data.
Absolutely. It transforms complex information into a visual language that's easier for traders to grasp quickly. And it goes even further. It provides tools like the super trend, the 200 cloud, a triple threat oscillator, moving average crossovers. It's like a whole toolbox for analyzing the market from different angles.
I also see that you can customize the charts. So whether you like things clean and simple, or you prefer a more complex view, VSQC has you covered.
That's right. That flexibility allows you to tailor the system to your individual trading style and preferences. But remember, tools are only as good as the person using them.
That's where the Rubik's Cube Algo Masterclass gets really interesting. It talks about going beyond the technicals and understanding the psychology of the market. Things like auction market theory, Stale-Lemaitre distribution, identifying supply and demand zones.
What are those exactly? These are essentially the areas where the real action happens in the market. Where buyers and sellers clash and prices are determined, the masterclass emphasizes the importance of recognizing these zones, especially liquidity zones, where large institutional traders tend to operate.
So being able to identify these liquidity zones can give you insights into where the smart money is moving and how to avoid getting caught in traps set by more experienced players.
Precisely. And that leads us to one of the most important aspects of trading: having the right mindset. The masterclass stresses the need for discipline, patience, and emotional control. Basically, not letting fear or greed dictate your decisions.
Because even with the best tools and insights, you can still sabotage yourself if you don't have the mental fortitude to stick to your plan.
Exactly. Now let's delve into the 5 core trading strategies that VSQC incorporates: Velez, Hoffman, 3-bar play, vector candle, and mean reversion. The masterclass suggests that by understanding these strategies, you can actually predict profitable trades using something called volume spread analysis triggers, specific candlestick formations and patterns that signal potential moves. They even mention things like a vivid red engulfing reversal and a trigger, VSQC DTAC plus retest of resistance. Those sound intriguing, don't they?
They do. Before we get into those specific strategies, though, I'm curious about some of the broader wisdom from the masterclass. It mentions hedging, risk management, recognizing stop hunts, the importance of continuous learning things that apply to trading in general, not just with VSQC.
Absolutely. There's a wealth of knowledge in there that can benefit any trader, regardless of their experience level.
Like that idea of taking partial profits to lock in gains and using trailing stop loss orders to manage risk. Those are practical tips that I could definitely use.
They're essential for protecting your capital and maximizing your potential.
So we've laid the groundwork, explored the philosophy, gotten a glimpse of the potential. Are you ready to dive into the specific strategies and trading setups that VSQC offers?
Let's do it. But always keep in mind, even with a visually intuitive system like VSQC, it's about understanding the why, the logic behind each setup.
Informed trading, that's what we're all about. I'm ready to learn.
All right, let's unpack these strategies, starting with the Velez strategy.
Yep.
This one focuses on something called market state. When the 20 and 200 simple moving averages are close together, we call that a narrow state, and it can signal a potential breakout.
So in a narrow state, you'd be looking for like high volume VSQC candles breaking above or below those moving averages, like that coiled spring analogy, sudden release of energy.
Exactly. But when those moving averages are far apart, we call that a wide state. In this situation, the Velez strategy suggests looking for countertrend trades, anticipating a mean reversion back to the narrow state like a pendulum swinging back to equilibrium.
But how do you know when to enter a trade? Are there specific signals to watch for?
The masterclass emphasizes paying attention to the stock's position relative to those moving averages, whether it's near, far, above, or below. It even identifies specific buy zones within the narrow state, labeled positions 1 and 2. While position 3, too far from the averages, is considered a no-go zone.
Okay.
The goal is to minimize risk and maximize potential.
So it's not just about the market state, but also the stock's position within that state. It's adding another layer of analysis to help you make more informed decisions.
Right. And of course, risk management is crucial. The masterclass stresses setting a protective stop loss under the VSQC bar or below the narrow state to limit potential losses.
Now, this part is interesting. The Velez strategy mentions adding to your position on the first color change after your initial entry, calling it a color change add. Is that essentially like buying more on a dip or pullback to capitalize on the momentum?
Precisely. But the masterclass distinguishes between actual and hidden color changes, adding a nuance that you'll want to explore further. It shows how VSQC can reveal subtle shifts in momentum that you might otherwise miss.
Okay. On to the Hoffman strategy. From looking at the code, it seems to be all about those inside range breakout bars, or IRBs, strong candles that break through the previous bar's range.
Yes. The Hoffman strategy focuses on those moments where momentum is building, where the market hints at a potential shift. But it goes beyond simply identifying IRBs. It combines them with VSQC colors, looking for specific setups that increase the probability of success.
Like those signal safe highs and signal wick displacement for bullish setups, and signal safe lows, and signal wick acceptance for bearish setups. Those terms sound a bit technical. What exactly do they mean?
Essentially, they're visual cues within the candlestick patterns that, when combined with VSQC colors, can confirm the strength and validity of a potential breakout. The masterclass provides visual examples to help you recognize these setups, making it easier to apply the strategy in real time.
The masterclass also talks about setting stops based on the specific setup, and using a trailing bar stop to lock in profits as the trade moves in your favor. It's like having a safety net that automatically adjusts to protect your gains.
Exactly. And just like the Velez strategy, the Hoffman strategy also utilizes those color change adds to increase position size and capitalize on momentum.
All right, strategy number 3, the 3-bar play. This one seems to be all about recognizing 3 candle patterns that signal a potential breakout or reversal.
Think of it as reading the story that those 3 candles are telling. Are they showing increasing momentum? Are the VSQC colors aligning with the price action? It's about recognizing patterns, much like our speed cuber with their Rubik's Cube.
The masterclass goes into detail about specific setups, like the tower top and tower bottom for reversals, and the 3 wise men and 3 black crows for continuations. And of course, it emphasizes using VSQC colors and volume analysis to confirm the validity of those patterns.
That's key. Not all patterns are created equal. The VSQC code, with its zero-lag calculations and emphasis on volume analysis, helps you filter out the noise and focus on setups with a higher probability of success.
Now, this is where it gets really cool. The masterclass suggests that the VSQC candlestick database can actually identify these 3 candle patterns automatically and sequence them by volume and momentum. It's like having a built-in pattern recognition system that does the heavy lifting for you.
That's the power of combining human intuition with algorithmic precision. And it goes even further. The code highlights triggers that start and stop those formations using something called volume spread analysis. This helps pinpoint potentially profitable trade setups that you might otherwise overlook.
Okay, on to strategy number 4, vector candles. What are these all about?
Vector candles help you identify those moments of extreme volume and price climax. Sudden bursts of energy in the market, they're like bright flashes that illuminate key areas where the market might be shifting direction.
The masterclass describes them as bright candles at the beginning and end of price action moves. It's like the market shouting, "Hey, pay attention, something big is happening here."
Right. And those high volume vector candles often indicate where large market participants, like institutional traders, have positioned their trades. The masterclass calls these areas vector recovery zones.
So essentially with vector candles, you're looking to trade mean reversions, anticipating the price to return to those high volume areas after a big move. It's like a rubber band snapping back after being stretched too far.
Exactly. But it's not as simple as blindly buying dips or selling rallies. It's about understanding the context, confirming the setup with VSQC colors, and managing risk appropriately.
The masterclass suggests using multiple time frames to confirm your analysis, ensuring the story is consistent across different zoom levels. It's like making sure all the pieces of the puzzle fit together.
And that brings us to the final strategy, mean reversion. This one's based on the idea that prices tend to revert to their average over time.
So with mean reversion, you're looking for those moments when prices move too far away from its average and is likely to snap back.
Exactly, and VSQC. With its dynamic moving averages and zero lag calculations, is perfectly suited for identifying these potential mean reversion setups. The masterclass mentions specific patterns, each with its own unique characteristics and entry-exit triggers.
It mentions the Bollinger Band squeeze, where you trade breakouts after the bands have contracted. It also talks about RSI divergence, where you look for discrepancies between price action and the RSI indicator.
And let's not forget those classic candlestick patterns, like the double top bottom and head and shoulders, which can also signal mean reversion opportunities when combined with VSQC colors and volume analysis.
It sounds like VSQC provides a whole arsenal of tools designed to exploit various aspects of market behavior. But the masterclass stresses that having a plan and sticking to it is paramount while always managing your risk.
That's right. Trading is not about chasing every signal or jumping on every opportunity. It's about being selective, patient, and disciplined in your approach.
So it seems like VSQC gives you a framework for understanding those different market behaviors and making informed trading decisions. But like you said, it's not a magic bullet.
That's absolutely key. No system or tool can guarantee profits. It still comes down to the trader's ability to interpret the information, manage risk, and make sound decisions.
And speaking of making sound decisions, the Rubik's Cube Algo Masterclass really stresses the importance of continuous learning and adaptation. What exactly do they mean by that?
Well, the market is like a living organism, constantly changing and evolving. What worked yesterday might not work tomorrow. The masterclass encourages traders to embrace a growth mindset, to keep experimenting, refining their strategies, and always be on the lookout for new insights.
So it's not just about learning a system like VSQC and sticking with it rigidly. It's about constantly questioning, testing, and adapting your approach as the market changes.
Precisely. And VSQC, with its visually intuitive interface and customizable features, is a great tool for that. It allows you to backtest different strategies, analyze your trades, and see what's working and what needs improvement. It's a platform for ongoing learning and discovery.
So what can we take away from all of this? The world of market analysis is complex, but tools like VSQC can help us make sense of it all. It's like having a guide who can point out the patterns and signals that might otherwise go unnoticed.
That's a good way to put it, but remember, no tool is a substitute for developing your own understanding of the market.
The masterclass compares the market to a constantly evolving puzzle. Tools like VSQC gives a unique framework for understanding its language and deciphering its clues.
It encourages you to go beyond simply following signals. It challenges you to think critically, experiment, and develop your own approach to navigating this complex world.
It's a journey of continuous learning, requiring patience, discipline, and a willingness to adapt. But with the right tools and mindset, you can definitely increase your chances of success.
Exactly. And who knows? Maybe you'll be the one to uncover the next big insight or develop a groundbreaking new strategy.
That's the exciting part. There's always something new to learn. Always room for growth and discovery in the world of trading. Well, thanks for diving deep with us into the world of VSQC. I know I learned a lot from this exploration.
It was my pleasure. Remember, keep exploring, keep learning, and never stop challenging yourself. Happy trading. All right, so get ready because today we are doing a deep dive into this trading system that's been making some noise.
Yeah.
Rubik's Algo, and its visual indicator VSQC volume squeeze candles. Now, you guys sent this in, and
it's interesting stuff.
Yeah, and I gotta say, even I was a little overwhelmed at first glance.
It's a lot to unpack.
It's a lot. So many documents, so many ideas.
Right.
But that's what we're here for, right? To break it down, see if there's anything here that can actually help you make better trades.
Yeah, and what's so interesting about this is that Rubik's Algo kind of pulls ideas from all over the place.
Yeah.
Blackjack, solving Rubik's Cube, even Six Sigma.
Yeah.
To analyze market data.
Yeah, it's not your typical trading system.
Right.
I have to admit, I'm a bit skeptical, but also super intrigued, especially by this whole volume focus.
That's where VSQC comes in.
Okay.
It takes something that can be really hard to decipher volume and turns it into a visual language. Right there in your candlestick charts. And it uses color gradients.
Okay.
To represent buying and selling pressure so you can see the strengths behind a price move at a glance.
Okay. I'm seeing some potential here. Okay. But can we back up a bit? You mentioned blackjack and Rubik's Cubes.
Yeah.
What's that all about?
So think of it this way. A good blackjack player will adjust their strategy based on what cards have already been dealt. Rubik's Algo works kind of similarly.
Okay.
It's designed to adapt to changing market conditions.
Okay.
Kind of like a Rubik's Cube solver. Looking for the fastest way to get to a solution.
Okay.
And this happens because of something called a dynamic moving average.
Okay.
Which constantly shifts based on market fluctuations.
So VSQC is like the visual representation of that.
Exactly. It's not just a simple buy or sell signal.
Right.
VSQC is a whole trading system that aims to make those often hidden market dynamics visible.
You keep saying visual, and I have to admit the color gradients within the candlesticks really jumped out at me when I was looking at the material.
It's design.
But I need to understand, how does this actually help me make money?
Imagine being able to instantly see the force behind a price move.
Okay.
That's what VSQC does with color. Deep greens tell you buyers are in control. Intense reds signal strong selling.
Okay.
It's like having X-ray vision for market momentum.
So I can see how that could be useful.
Yeah.
But the material also mentions incorporating proven strategies.
Right.
What exactly does that mean? Is this just repackaging old ideas?
No, it's about taking proven concepts and making them even more powerful.
Okay.
Think of traders like Oliver Velez, who's famous for identifying institutional money flow.
Right.
And Robert Hoffman, who developed the Inventory Retracement Bar, or IRB.
Okay.
VSQC incorporates those concepts, but then adds another layer of insight with its visual cues.
So if I'm already using something like the Hoffman IRB, how exactly does VSQC give me an edge?
Take IRB as an example.
Okay.
VSQC adds visual confirmation to those setups, highlighting key levels for entries and exits that you might miss otherwise.
Okay.
And the color gradients allow you to place your stop-loss orders much tighter, minimizing risk and giving you a better risk-reward ratio.
Now that's what I'm talking about.
Right.
Okay. The material also mentions a few key benefits of VSQC.
Yeah.
First up, they say it provides enhanced volume analysis.
Right.
Now help me out here, because traditional volume indicators can be a real headache to interpret.
Yeah.
How does VSQC make volume easier to use?
Traditional indicators often require you to cross-reference multiple charts and data points.
Right.
It's mental gymnastics. VSQC, on the other hand, brings volume directly into the candlestick chart.
Okay.
Using those color gradients we talked about.
Okay.
This allows you to assess buying and selling pressure immediately. You see it right there in the colors of the candles.
So it's all about making it intuitive. Okay. The next benefit they highlight is simplified interpretation.
Right.
Honestly, my charts get so crowded with indicators, sometimes it's hard to see the forest for the trees.
Yeah.
How does VSQC cut through all that clutter?
By presenting complex data visually through those color gradients, VSQC eliminates a lot of that mental work you'd normally have to do to decode the market. You no longer need a dozen different indicators on your screen.
Right.
It's all right there, built into the candles themselves.
I can see how that would be a game changer, especially for someone just starting out.
Absolutely.
Okay, another big one they highlight is customizability.
Yeah.
That seems key because every trader has their own style.
Right.
What kind of control does VSQC give you over the system?
VSQC is incredibly flexible.
Okay.
You can tweak things like the color schemes, the look back periods for calculations, the volume thresholds, basically a whole range of parameters.
So it's adaptable.
Exactly.
Got it. Now, the documents also mention masterclass support. Tell me more about this masterclass.
It's a detailed guide that walks you through every aspect of Rubik's Algo and VSQC.
Okay.
From the basics to more advanced strategies. And what's really cool is that it's powered by a large language model.
Okay.
Essentially an AI trading coach to help you learn.
Interesting.
Yeah.
Okay, so we've got this visually driven system that claims to simplify volume analysis and incorporates proven strategies. But then there's this whole trading stupid concept.
Yeah.
Honestly, the name throws me off a bit.
I know.
What does it actually mean to trade stupid?
It's not about being reckless or uninformed.
Okay.
It's about simplifying your approach.
Okay.
And in a way, aligning yourself with what the market makers are doing.
Okay.
You can't predict the market perfectly.
Right.
So trading stupid means focusing on high probability setups,
Okay.
removing your emotions, and letting the system do the heavy lifting.
So less about being a genius,
Yeah.
more about being a disciplined observer.
Exactly. Trust the process, trade stupid.
Okay. I kind of like it.
I like it too.
All right, let's get into some of the specific features of VSQC.
Okay.
One that really jumped out at me was the connection to the Ichimoku cloud.
Yeah.
Now, for those who don't know, it's a popular indicator,
Right.
but can get pretty complex.
Oh, yeah.
How does VSQC make use of it?
The traditional Ichimoku cloud can be pretty overwhelming.
Yeah.
All those lines on your chart.
Yeah.
VSQC takes the core mathematical principles of Ichimoku,
Okay.
specifically its time and price calculations,
Mm-hmm.
but integrates them without actually plotting all those lines.
So it's like getting the benefits of Ichimoku without the visual clutter.
Exactly. It makes those concepts a lot more digestible.
They keep mentioning dynamic scaling and comparing it to solving a Rubik's Cube.
Right.
What's the connection there?
Every time you twist a Rubik's Cube, it impacts what you do next, right?
Right.
Market moves are similar.
Got it.
Each one influences the next.
Okay.
VSQC adapts to that volatility
Okay.
and helps you visualize those patterns.
It's about seeing how each move connects to the bigger picture.
So it's not just reacting to the market, it's anticipating what might come next.
That's the idea.
Okay.
It's about recognizing the patterns that market makers use to solve the market using algorithms and mean reversion principles.
Now, one thing that caught my eye was this updated database of candles and patterns.
Oh, yeah.
They keep talking about.
That's a big one.
What's the big deal about that?
This is where it gets really exciting.
Okay.
Imagine a system that's taken decades of research
Okay.
on volume spread analysis and candlestick patterns and turned it into a visual language you can see right there in the candlesticks.
So it's not just about spotting those classic candlestick patterns, it's something more.
It's about understanding the force behind the pattern.
Okay.
Those color gradients within the candles give you extra information about the strength of buying and selling pressure.
Mm-hmm.
That helps you spot high probability setups
Okay.
and anticipate potential reversals.
Okay. I'm getting it.
Now, this next part I'm really curious about.
Yeah.
Because it's not something you typically see in trading systems.
Right.
They go pretty deep into analyzing trader personalities using the Enneagram.
It's an interesting approach.
Have you ever encountered this before?
I've seen it in a few other systems,
Okay.
but it's not typical.
Okay.
But it can be incredibly valuable for traders.
All right.
Each Enneagram type has its own strengths and weaknesses.
Mm-hmm.
And those can definitely play out in your trading.
So how can understanding your Enneagram type actually translate into better trading decisions? Can you give me an example?
Let's take type 1, the perfectionist.
Okay.
They tend to overanalyze
Right.
and can struggle with taking action. Knowing this about themselves can help them use VSQC's visual cues
Okay.
to overcome that hesitation
Okay.
and make more decisive trades.
So it's about self-awareness,
Exactly.
knowing your tendencies,
Yeah.
and then having a system that can help you work with them.
Right.
Or maybe even compensate for them.
Yeah.
Exactly. Now, think about type 7, the enthusiast.
Okay.
They love new ideas,
Right.
but can easily get distracted
Okay.
and might overtrade. For them, VSQC can help them stay focused and avoid impulsive decisions.
Okay. This is fascinating stuff.
It is.
We've covered a lot of ground here, but it seems like the real test is whether this can all be put into practice.
Right.
What would a practical trading strategy
Right.
using Rubik's Algo and VSQC actually look like?
Well, it starts with confirming the trend.
Okay.
We use a combination of the super trend indicator and something called the 200 cloud
Okay.
to see what the market is doing.
Okay.
The super trend gives you a clear signal of whether the market's trending up or down, and the 200 cloud provides context.
Okay.
Basically, a rising super trend above the cloud suggests an uptrend, and vice versa.
So I'm looking for those two things to agree.
Exactly. And remember those color gradients in VSQC?
Yeah.
They come into play here too.
Strong greens in an uptrend or strong reds in a downtrend add extra confirmation that the trend is healthy.
Got it. Trend confirmed.
Okay.
What's next?
Next, we focus on those key trading zones.
Okay.
Near the 20 and 200 period, simple moving averages.
Okay.
Prices tend to gravitate towards these levels.
Okay.
And those areas often present the best trading opportunities.
So we've got our trend and we've zeroed in on a potential trading zone.
Right.
Now what?
Now we look for setups.
Okay.
This is where those proven strategies we talked about, the Oliver Velez,
Right.
the Hoffman IRB, the 3-bar play,
Yep.
come in.
Okay.
VSQC enhances these strategies by adding those visual confirmations.
Okay.
We look for those color gradients, those volume patterns that tell us the setup is solid and has a high probability of working.
Okay, so it's not about throwing those strategies out the window.
No.
It's about having an extra layer of confirmation.
Exactly.
But I have to ask, with all this talk of confirmation, what are we actually trying to confirm?
We're looking for signs that the market makers, the big players, are moving in a certain direction.
Okay.
Remember the trading stupid philosophy?
Yeah.
It's about aligning ourselves with those powerful forces in the market.
Okay, so we're trying to piggyback on the moves of the smart money.
Exactly.
I like it, but how do we actually see what they're doing?
Volume is the key.
Okay.
It's the fuel behind those big price moves. The material you sent in called it the roar of the trading floor.
I love that.
Even in today's digital world.
And they made that great analogy about price being like the motion of a car.
Yes.
And volume being the gas.
Yeah.
No gas, no movement.
Exactly.
Yeah.
High volume confirms trends. Low volume can contradict them.
Right.
VSQC helps us see those volume patterns more clearly.
Okay.
It integrates those color gradients directly into the candlestick charts. So we can instantly identify those volume spikes and divergences that give us clues about the market's direction and momentum.
They also talk about using volume to identify market maker traps,
Right.
which sounds a bit scary.
Yeah.
What are those traps and how does VSQC help us avoid them?
One common trap is the false breakout,
Okay.
where price breaks through a key level, often with a surge in volume,
Right.
but then quickly reverses. Traders who chase those breakouts can get burned.
Ouch.
VSQC helps you differentiate between real breakouts and those fake outs.
Okay.
You want to see sustained, strong volume
Okay.
and those vibrant colors in the candlesticks confirming the move.
So it's not enough to just see a price break through a level.
Right.
We need to see the volume and those color gradients confirming the move.
Exactly. Another trap is chasing gaps.
Oh, yeah.
Gaps are those spaces on the chart
Right.
where price jumps up or down overnight. They can look like exciting opportunities,
Yeah, they do.
but often they're just setups to trigger stop loss orders and lure traders into bad trades. Again, VSQC can help you avoid those by looking at volume and price action confirmation.
Okay, I'm starting to see how this all fits together.
Yeah.
But before we get too deep into the technicals,
Yeah.
I want to circle back to something that really intrigued me.
Right.
The Enneagram.
Right.
We talked about how understanding your Enneagram type can help you become a better trader.
Yeah.
But I need to hear some more concrete examples.
Absolutely.
Yeah.
Let's consider type 8, the challenger.
Okay.
They're naturally decisive and assertive,
Right.
which can be great for taking action in the markets, but it can also make them prone to impulsive trades
Right.
if they're not careful.
So someone like that might benefit from VSQC's visual cues,
Exactly.
which could help them confirm their decisions and avoid acting on gut feelings alone.
Exactly. Now, on the other end of the spectrum, you have type 9, the peacemaker.
Okay.
They value harmony and often avoid conflict, which might make them hesitant to enter trades or pull the trigger on those exits.
Right. So for them, it might be about learning to trust the signals that VSQC is giving them.
Exactly.
Even if it means stepping outside of their comfort zone.
Exactly. It's about understanding how your personality might be helping or hurting you as a trader, and then using a system like VSQC to work with your strengths and compensate for your weaknesses.
Okay, I'm starting to see the value in this whole Enneagram approach.
Yep.
It's really about self-awareness
Yes,
and then using the tools available to you to become a more effective trader.
precisely. And the material you sent in actually does a great job of breaking down each Enneagram type
Oh, good.
and offering specific tips for how to apply VSQC based on your personality.
I'll have to dive deeper into that.
Okay.
All right, so we've talked about trend confirmation, trading zones, setups, those market maker traps,
Right.
and even how your personality can impact your trading.
Yep.
What else is there?
Well, there's another interesting concept they bring in,
Okay.
auction market theory.
Okay, I've heard of that.
It essentially says that the market is a continuous auction, with prices being determined by the interaction of buyers and sellers.
Okay.
It's simple, but it's powerful.
And how does that relate to VSQC?
VSQC helps us see those shifts in supply and demand,
Okay.
those imbalances that create trading opportunities within this auction process.
Okay.
They talk about balance and imbalance in the market.
Okay.
Balance is when prices are relatively stable.
Right.
Buyers and sellers are pretty much equal.
Mm-hmm.
Imbalance is when things shift,
Okay.
often triggered by news events or a change in sentiment.
Okay. And VSQC can help us see those shifts as they happen.
It can. Through its visual representation of volume and price action,
Okay.
VSQC highlights those moments when the market is moving from balance to imbalance, or vice versa.
That's powerful. So it's not just about following the trend. It's about understanding those shifts in the auction process.
Right.
And positioning yourself to profit from those changes.
That's a great way to put it. Now, related to this idea of balance and imbalance are these concepts of compressions and expansions.
Okay. Tell me more about those.
Compressions are periods of low volatility.
Okay.
When the market is consolidating, prices are trading within a narrow range.
Okay.
It's like the market is taking a breath.
Okay.
Expansions are when the market breaks out of that range, often with a surge in volume
Yeah.
and more dynamic price movements.
Okay.
It's like the market is exhaling.
I like that analogy. So how does VSQC help us identify these compressions and expansions?
The color gradients, volume patterns, and price action depicted by VSQC can help you anticipate these breakouts and those shifts from compression to expansion,
Okay.
giving you a chance to get in early on those big moves.
So we're looking for that moment when the market shifts from that quiet consolidation phase to a more explosive breakout phase.
Exactly. Now, remember those market maker traps we talked about?
Yeah, the false breakouts and gaps.
Right.
Those are still fresh in my mind. What else should we be on the lookout for?
There's another trap they call the bull trap or bear trap.
Okay.
These are basically fake outs that occur within a trend.
Okay.
For example, in an uptrend, you might see a sharp drop in price,
Okay.
making it seem like the trend is reversing.
Okay.
But it's just a temporary pullback
Okay.
designed to shake out weak hands.
So traders get scared, they sell, and then the market continues higher, leaving them behind.
Exactly. VSQC can help you avoid these traps because it looks at volume patterns.
Okay.
Those sharp drops or spikes in price are often accompanied by low volume, indicating a lack of conviction behind the move.
So again, it's about looking beyond the price action.
Right.
And seeing those clues from volume
Yeah.
and those color gradients.
Exactly. It's about seeing the whole picture, not just one piece of the puzzle.
Okay. This is all starting to click into place.
Good.
But then there's this whole Rubik's Cube thing again.
Right.
Honestly, it's kind of mind-blowing to me how they connect a physical puzzle to financial markets.
They call it the Rubik's algorithmic code.
Okay.
And it's really about identifying these repeating patterns of volume and price action.
Okay.
Think of it like this. Each twist of a Rubik's Cube represents a specific action. And the right sequence of actions leads to a solved puzzle.
So you're saying that market makers are using these sequences, these algorithms, to manipulate the market.
That's the theory.
Okay.
And VSQC, with its visual representation and its roots in this Rubik's Cube concept,
Right.
helps you decipher that code,
Okay.
see those patterns, and hopefully anticipate those moves.
All right. I'm with you so far.
Good.
Now, they also talk about how VSQC can identify what they call unclassified organic candle patterns.
Oh, yeah. That's interesting.
What are those and why are they important?
This is where VSQC really shines.
Okay.
Traditional candlestick analysis focuses on a specific set of patterns,
Right.
but the market is constantly evolving and new patterns are always emerging.
Right.
VSQC doesn't just rely on those classic patterns. Its algorithm uses AI to identify these new undefined patterns based on real-time volume and price data.
So it's like VSQC is a constantly learning system.
Exactly. It's adapting to the market's ever-changing dynamics and showing you things that you might miss with traditional analysis.
That's pretty cool. Now, I have to admit, the next part gets a bit technical for me.
Yeah, it can be a bit much.
They start talking about dynamic scaling,
Right.
that Rubik's Cube analogy again,
Yeah.
and something called the Candlestick and Candle Pattern Formation Database.
Oh, yeah.
Help me make sense of all this.
Let's start with dynamic scaling.
Okay.
Remember how we talked about VSQC adapting to market volatility?
Yeah, like a Rubik's Cube solver.
Exactly.
Yeah.
That's what dynamic scaling does.
Okay.
The system adjusts its calculations based on how volatile the market is,
Right.
ensuring that the signals it gives you are accurate,
Right.
whether the market is calm or going crazy.
Well, it's like a built-in volatility filter.
Exactly. And they connect this back to the Rubik's Cube,
Oh boy, here we go.
saying that VSQC has deciphered the Rubik's Cube perm's algorithms into a market analysis tool. It's a fancy way of saying they've taken the principles of pattern recognition and applied them to the market.
Okay, I think I'm following. Now, what about this candlestick and candle pattern formation database? That sounds impressive.
This is the heart of VSQC.
Okay.
It's a massive library of candlestick patterns, volume sequences, and those unclassified organic patterns, all enhanced by VSQC's insights. It took them over a year to develop,
Wow.
analyzing thousands of trades and using AI to refine the system.
Okay.
They call it a Six Sigma approach to market analysis, focusing on data-driven,
Right.
statistically validated decision-making.
So VSQC is like a high-powered,
Yes.
data-driven candlestick pattern recognition machine.
That's one way to put it.
Okay.
It's about taking all that knowledge about candlesticks and volume analysis,
Right.
and putting it into a system that can identify high probability setups for you.
I like it. Now, they also talk about this idea of market time versus chronological time. Yeah.
What's the difference?
Instead of looking at the market in fixed intervals.
Right, like hours, days, weeks.
Exactly.
Yeah.
VSQC looks at it in terms of market activity.
Okay.
It's about focusing on the market's movements.
Right.
Those compressions and expansions, those swings in momentum and volume,
Okay.
rather than arbitrary time segments.
So it's about tuning into the market's rhythm.
Exactly.
Yeah.
It's recognizing that market time is dynamic.
Right.
VSQC helps you tap into that rhythm and trade accordingly.
Okay, this is getting pretty deep.
It is.
And then they start talking about game design principles and how they applied them to the creation of VSQC.
Right. They want to make it engaging and intuitive.
They have this idea of not changing the players to match the game, but changing the game to match the players.
Right.
Which basically means they designed VSQC to work with how traders actually think and behave.
Exactly.
I like that it's about making the system intuitive and user-friendly. Exactly. And they have these interesting principles, like if everyone likes your game but no one loves it, it will fail.
Okay. I'm not sure I understand that one.
They're saying it's better to have a system that some people love and some people hate
Okay.
than a system everyone feels just okay about.
Right.
It's about having that it factor
Yeah.
that draws people in and keeps them engaged.
I guess that makes sense. That they also say be more afraid of boring your players than challenging them, which sounds like a good motto for life in general.
Right. It's about creating a system that challenges people to think differently and step outside their comfort zones. And that's what VSQC does.
Okay.
It takes a fresh approach to market analysis.
Okay, now for the part that really caught my attention,
Okay.
the blackjack connection.
Yes.
What does card counting have to do with trading?
It's about finding those edges, those statistical advantages that can help you win. Just like a card counter knows when the odds are in their favor, VSQC helps you identify those moments in the market where the probabilities are tilting in your direction.
Okay.
It's all about finding those asymmetries,
Right.
those imbalances that you can exploit.
But they also talk about how the game isn't always fair,
Right.
how market makers have access to information that regular traders don't.
Yeah.
Similar to how casinos use surveillance to track card counters.
Yeah. It's a bit unsettling, right?
Just a little bit.
But the point is to be aware of those forces at play
Okay.
and develop strategies to manage those risks.
So it's back to that trading stupid philosophy.
Exactly.
Know the game, understand the players, and play strategically.
Exactly. Now, are you ready to see how all this comes together
Absolutely.
and some actual trading strategies?
Let's get into the nitty-gritty of using VSQC in action.
Well, first up, we need to
Okay.
choose the right strategy for the right market.
Okay. So we're not just going to apply the same approach to everything.
Definitely not. Think of it like this.
Okay.
You wouldn't use the same fishing techniques in a pond that you would in the open ocean.
Yeah.
Stocks, Forex, crypto.
Right.
They all have different characteristics, different players, different levels of volatility.
Makes sense. So how do I know which approach to use with VSQC?
Well, the material you sent in goes into detail about how to adapt the system to each market.
Okay.
For example, in the fast-paced world of crypto, you might focus on shorter time frames and use VSQC to identify those quick bursts of momentum.
Okay.
In the stock market, you might look at longer-term trends and use VSQC to confirm those classic chart patterns.
Okay, so it's all about adapting the system to the specific market you're trading.
Exactly.
Got it. Now, they also talk about managing risk using VSQC.
Right. Risk management is crucial.
Yeah, absolutely.
You got to protect your capital.
Speaking of managing risk, they also talk about hedging,
Right.
which I know is a way to protect yourself from big losses, but I've always found it a bit confusing.
Think of it like an insurance policy for your trades. You're basically taking a position that offsets the potential losses in another position.
Okay, that makes sense. So what are some examples of how to use hedging with VSQC?
The material dives into different techniques for each market,
Okay.
like using options, futures contracts,
Uh,
or even stable coins in the crypto world.
okay.
It gets pretty advanced.
Yeah.
But the idea is to have a plan B,
Okay.
especially in those volatile markets where things can change quickly.
Right. I'll have to do some more research on that.
Yeah, it's worth exploring.
Now, before we wrap up, I want to touch on something we've mentioned throughout this episode.
Okay.
Trader psychology.
Oh, yeah, that's a big one.
Even with the best system in the world,
Right.
our emotions can really sabotage us.
Absolutely.
Yeah.
Fear, greed, impatience, all of those things can lead to bad decisions.
Mm-hmm.
The trading stupid philosophy is all about recognizing those emotional traps
Right.
and finding ways to avoid them.
Yeah. And one of the keys is discipline.
Absolutely.
Sticking to your plan even when things get crazy.
Exactly. Discipline is key. And VSQC can actually help with that.
Okay.
They're providing clear signals.
Right.
And those visual cues, it can take some of the emotion out of your trading.
Right.
It's about trusting the system and not second guessing yourself every step of the way.
So it's like having a set of rules to follow, which can help you stay calm and rational, even when the market is going haywire.
That's the idea.
Okay.
Now, another important psychological aspect they highlight is patience.
Okay. Patience is tough.
It's about waiting for those high probability setups
Mm-hmm.
and not forcing trades just because you're feeling impatient or bored.
Right. They had that great line about not turning a day trade into a therapy session.
Exactly.
Yeah.
Sometimes the best trade is no trade at all.
That's true.
And VSQC can help you stay patient
Okay.
by filtering out those low probability setups
Mm-hmm.
and focusing your attention on those trades that have a higher chance of success.
Okay, I like that. So it's not just about the technical signals.
Yeah.
It's about combining those signals with a disciplined and patient approach. Exactly. It's the whole package.
But what about those traders who really want to take things to the next level?
Right.
What does the material say about that?
Well, there's a whole section called Mastering the Metagame
Oh, wow.
where they talk about thinking beyond the charts
Okay.
and understanding the psychology of the market.
So it's like market psychology 2.0.
Yeah, you could say that.
Okay.
It's about anticipating the moves of the big players,
Okay.
the institutions, the smart money.
Sounds intense.
It can be, but it's also incredibly rewarding.
So it's less about reacting to the market and more about understanding the forces driving it.
Exactly. They delve into concepts like liquidity zones,
Okay.
market structure, order flow analysis.
Okay.
These are all advanced tools
Right.
that can help you understand the dynamics of the market
Okay.
and potentially anticipate those big moves
Mm-hmm.
before they happen.
Okay, now this all sounds fascinating, but I'm also getting the sense that this is not a system for beginners. You're right, it does require a certain level of understanding of the markets
Right.
and a willingness to put in the time to learn and practice.
It's not just plug and play.
Exactly, it's a journey.
Okay, well, for those who are ready to take that journey, what are some resources where they can learn more about Rubik's Algo and VSQC?
Well, they have a website with a ton of information.
Okay.
Articles, videos, tutorials.
Mm-hmm.
They also have an active community forum
Okay.
where traders share ideas and strategies.
It's always good to connect with other traders.
Absolutely.
Yeah.
It's a great way to learn from each other and stay motivated.
So, listener, if you're intrigued by what you've heard today,
Yeah.
we encourage you to check out their website, dive into the material, and see if Rubik's Algo and VSQC are right for you.
And don't forget to trade stupid.
Okay, we've covered a lot of ground today, but
And use VSQC to confirm those classic chart patterns.
okay, so it's all about adapting the system to the specific market you're trading.
Exactly.
Got it. Now, they also talk about managing risk using VSQC.
Right. Risk management is crucial. You got to protect your capital.
Yeah, absolutely.
No doubt about it.
Speaking of managing risk, they also talk about hedging,
Right.
which I know is a way to protect yourself from big losses, but I've always found it a bit confusing.
Think of it like an insurance policy
Okay.
for your trades.
Okay.
You're basically taking a position that offsets the potential losses
Mm-hmm.
in another position.
Okay. Does that
Right.
make sense? So what are some examples of how to use hedging with VSQC?
The material dives into different techniques for each market,
Mm-hmm.
like using options, futures contracts, or even stable coins in the crypto world.
Okay.
It gets pretty advanced.
Yeah.
But the idea is to have a plan B,
Okay.
especially in those volatile markets where things can change quickly.
Right. I'll have to do some more research on that.
Yeah, it's worth exploring.
Now, before we wrap up, I want to touch on something we've mentioned throughout this whole deep dive.
Okay.
Trader psychology.
Oh, yeah, that's a big one.
Even with the best system in the world, our emotions can really sabotage us, right?
Absolutely. Fear, greed, impatience, all of those things can lead to bad decisions.
Right.
The trading stupid philosophy is all about recognizing those emotional traps and finding ways to avoid them.
Yeah, and one of the keys is discipline, sticking to your plan, even when things get crazy.
Exactly. Discipline is key. And VSQC can actually help with that by providing clear signals and those visual cues. It can take some of the emotion out of your trading.
Okay.
It's about trusting the system and not second guessing yourself every step of the way.
So it's like having a set of rules to follow, which can help you stay calm and rational, even when the market is going haywire.
That's the idea. Now, another important psychological aspect they highlight is patience.
Okay. Patience is tough.
It is. It's about waiting for those high probability setups and not forcing trades just because you're feeling impatient or bored.
Right. They had that great line about not turning a day trade into a therapy session.
It's exactly. Sometimes the best trade is no trade at all, and VSQC can help you stay patient by filtering out those low probability setups and focusing your attention on those trades that have a higher chance of success.
Okay. I like that. So it's not just about the technical signals.
No.
It's about combining those signals with a disciplined and patient approach.
Exactly. It's the whole package.
But what about those traders who really want to take things to the next level?
Right.
What does the material say about that?
Well, there's a whole section called Mastering the Metagame, where they talk about thinking beyond the charts and understanding the psychology of the market.
Oh, wow. So it's like market psychology 2.0.
Yeah, you could say that it's about anticipating the moves of the big players, the institutions, the smart money.
Sounds intense.
It can be, but it's also incredibly rewarding.
So it's less about reacting to the market and more about understanding the forces driving it. Exactly. They delve into concepts like liquidity zones, market structure, order flow analysis. These are all advanced tools that can help you understand the dynamics of the market and potentially anticipate those big moves before they happen.
This has been an incredible deep dive.
I agree.
We've gone from the basics of Rubik's Algo and VSQC to some really advanced concepts. Any final thoughts?
I think the biggest takeaway is that Rubik's Algo and VSQC offer a unique approach to market analysis. It's all about simplifying complex information, making it visual, and providing traders with tools that can help them make more informed decisions.
And it's about that trading stupid philosophy, right?
Yeah.
Trusting the system, managing your risk, and staying disciplined.
Exactly. But it's also about never stopping learning and adapting.
Right.
The market is constantly changing, so you have to be willing to evolve with it. Well said, listener. We hope this deep dive has given you a solid understanding of Rubik's Algo and VSQC. Remember, knowledge is power, but only if you apply it. So go out there, experiment, test these concepts, and see if they can help you achieve your trading goals. Good luck out there and trade smart.
Welcome to our deep dive into VSQC. You've sent over some code and a masterclass document that seems to be based on this idea of trading the market like you would solve a Rubik's Cube.
Right. Imagine using the same skills a speedcuber uses to decipher patterns, but for the stock market.
So VSQC is trying to find those patterns in like price action and volume.
Exactly. And the cool part is how it turns complex market data into something you can easily understand, like turning raw numbers into a language.
The document mentions market permutations and order flow sequencing. Do those terms have to do with this Rubik's Cube idea?
Yeah, imagine each twist of the cube represents a market shift up or down. The order of those twists, the sequence, forms a pattern. That's similar to how orders are filled in the market. They create a flow, a sequence of events that VSQC wants to decode.
So VSQC uses algorithms just like a speedcuber to analyze market data.
Absolutely. The code you provided uses calculations to process the data and then presents it in a way that's easy to understand. Like a speedcuber breaking down a difficult solve into smaller steps. It's about making sense of the chaos.
Okay, that makes sense. Now, one of the first things I noticed was how VSQC uses color. It's not just your typical green for up and red for down. There are all these shades and gradients inside the candlesticks.
That's a key feature. It uses color gradients to show the force of buying and selling. You see grizzly bear and apis bull, volume gradients mentioned in the code, and each one has a specific color spectrum.
So instead of just a green candle, you might see a pale green or a vivid green, and each shade means something different.
Exactly. A pale green might mean hesitant buying, while a bright green could indicate strong bullish momentum. The color is like an extra layer of information about the conviction behind the move.
Interesting. It sounds like that could help you avoid those situations where you think a move is strong, but it's actually weak.
That's the idea. VSQC aims to give you a more nuanced view of the market.
Okay, I'm seeing some references in the code to a dynamic EMA, and the masterclass document compares it to a blackjack card counter. How does that work?
The dynamic EAM, or exponential moving average, is constantly adjusting its length based on how volatile the market is. Just like a card counter changes their strategy based on the cards that have been dealt, the dynamic EMA adapts to the changing conditions.
I'm looking at snippets in the code about dynamic length, alpha, and Excel factor. So if the market starts moving fast, the dynamic EMA adjusts.
Exactly. When the market gets volatile, the dynamic EMA reacts quicker, like a card counter raising their bet when the odds are good. In calmer markets, it slows its adjustments. It's constantly trying to find the right pace to match the market.
So this is good for a trader because they're not stuck with a lagging indicator.
Right. It's all about being responsive. VSQC, through the dynamic EMA, is trying to keep you in sync with the market no matter how fast or slow it moves.
The code also mentions the VSQC guru table, which seems connected to the Ichimoku cloud. What's that about?
The Ichimoku cloud is popular but can be complex to interpret. The guru table is like a translator. It takes the Ichimoku cloud signals and distills them into a score, sort of like a rating system, from +16 to -16.
So even if I don't understand the Ichimoku cloud, I can still get insights from it through the guru table.
That's the point, simplifying complex information.
Okay, let's move on to the liquidation heat map. This seems focused on risk and volatility, right?
Absolutely. The liquidation heat map is designed to identify areas on the chart where we might see big price swings caused by cascading stop-loss orders. The code references volume thresholds and volatility thresholds. It's looking for a buildup of trading activity that could trigger a sudden move.
So it's like looking for those pressure points in the market, places where things could explode.
That's a great way to put it. The heat map helps you visualize these potential liquidation zones so you can be aware of them and adjust your trading. It's like knowing where the market might get wild.
But the heat map doesn't just look at one time frame, right? I see the code mentioning 30, 60, 240M. That sounds like different time frames.
You're right. The liquidation heat map analyzes these potential liquidation zones across multiple time frames. It gives you a broader perspective on market risk. It's not just about what's happening right now on a 5-minute chart, but also how larger time frames might be influencing the action.
So it's like zooming out and seeing the bigger picture.
Exactly. It's about understanding how these different time frames interact and how they might contribute to those big explosive moves.
Okay, this is a lot to process. And I'm noticing there are still a lot of references in the code to specific candlestick patterns that VSQC is supposed to detect.
We've only scratched the surface. There's a whole world of patterns, strategies, and insights waiting to be explored.
Well, let's take a deep breath and dive into those patterns and strategies next. This is getting really fascinating.
I'm ready when you are. Let's go back to those candlestick patterns. The VSQC Masterclass document seems to place a lot of emphasis on them.
It does. And it's not just about identifying the patterns. VSQC takes it a step further by incorporating those color gradients and volume analysis.
Right, so instead of just a piercing line or a dark cloud cover, you're getting information about the force behind it. Is it a weak piercing line or a powerful one with strong buying pressure?
That makes sense. It's like the difference between seeing a footprint and knowing if it was made by a mouse or an elephant.
Exactly. And it doesn't stop at single candle patterns. It talks about multi-candle formations like morning stars and evening stars, and even more complex patterns like the 3 black crows and 3 white soldiers.
It seems like VSQC is giving you an X-ray vision into the market, letting you see these patterns form.
That's a great analogy. And what's interesting is how the document connects these patterns to trading strategies. For example, a vivid green piercing line above a rising dynamic EMA might be a signal to go long, while a vivid red dark cloud cover below a falling dynamic EMA could suggest exiting a long or even shorting.
So it's not just pattern recognition, it's about understanding what they mean for buyers and sellers.
Precisely. And the document goes even deeper, referencing the Hoffman inventory retracement bar.
I was wondering about that one. It's in the code, but there's not a lot of explanation. What is the Hoffman inventory retracement bar?
It's basically a way to try and identify when large institutions, or smart money, are entering or exiting the market. These institutions trade in huge volumes, leaving footprints on the chart. The Hoffman inventory retracement bar tries to isolate those footprints.
So it's like tracking the footprints of a giant. You might not see the giant, but you can tell it was there.
Exactly. The masterclass suggests that recognizing these institutional moves can give traders an edge. It's like knowing which way the herd is running before the stampede starts.
Okay, so we've talked about patterns, but the document also goes into some specific trading strategies. There's a section on the 3-bar play, for instance.
The 3-bar play seems designed to capitalize on short-term momentum shifts. It involves identifying 3 candles that meet specific criteria related to color, volume, and price action. Essentially, you're looking for a sequence of candles that signals a burst of buying or selling pressure.
So you're trying to catch those waves of momentum.
Right. And the document provides several variations of the 3-bar play, each for different market conditions. There's one for reversals, another for breakouts, and so on.
It's like having a set of tools for different jobs.
And what's impressive is how it goes beyond just identifying these setups. It talks about how to manage the trade once you're in, including where to set stop losses and how to take profits.
That's great. Trading is about more than just finding entries. It's about managing risk and protecting your capital.
Absolutely. And speaking of risk management, the masterclass emphasizes using the liquidation heat map with strategies like the 3-bar play. Remember, that heat map highlights areas where we might see sudden price moves. The idea is to use the 3-bar play or another strategy to time your entries and exits in those volatile zones.
So it's like knowing where the rapids are in a river and then using your paddling skills to navigate them.
That's a good analogy. Now, the document also mentions some more advanced concepts like UTAD and DTAC, which are up thrust after distribution and down thrust after accumulation. Have you heard of these?
I've come across them, but to be honest, they've always seemed a bit confusing. What's the basic idea?
They're patterns that try to identify climax points in a trend, those moments when the move is about to reverse. The UTAD is like the final burst of buying before a top, while the DTAC is like the final wave of selling before a bottom.
So it's about recognizing those momentum shifts that signal a change in direction.
Exactly. And the masterclass document breaks down the characteristics of these patterns and explains how to trade them. VSQC is not just about analysis, it's also about developing a feel for the market.
Speaking of feel for the market, the document also talks about volume recovery and effort versus result. What are those about?
Volume recovery focuses on the relationship between price and volume to assess the strength of a move. It looks for signs that the momentum is fading or building. Are buyers or sellers getting exhausted, or are they coming in strong?
So it's like checking the engine of a car to see if it's running strong or sputtering.
That's a good analogy. Effort versus result is also interesting. It's about comparing the price movement to the volume. If there's a lot of effort, meaning high volume, but little result, meaning little price change, that could be a sign of trouble.
It's like watching a weightlifter struggle to lift a barbell, but it barely moves.
Yeah.
They're probably at their limit.
Exactly. Now, the masterclass emphasizes that these advanced concepts are best used with the more basic VSQC signals. It's about layering your analysis to get a complete picture.
This is starting to sound like a whole new language for reading the price action. It's not just about candles or indicators. It's about combining all these elements into a system.
That's a great way to put it. And what's also interesting is that VSQC is highly customizable. The code allows traders to adjust parameters to fit their own styles and risk tolerance.
So you can tweak things like the color gradients, the volume thresholds, the look-back periods, and so on.
Precisely. It's like a suit tailored to your measurements. The masterclass encourages traders to experiment with different settings and find what works best. It's all about personalization.
It's clear that we're only scratching the surface. There's still so much to explore in this code and the masterclass document.
You're right. There are sections on Elliott wave theory, liquidity gaps, and even trading psychology. This truly is a deep dive into market analysis.
And remember, this isn't just theoretical. It's based on real code and a trading system that you can use. It's practical knowledge.
Let's take a moment to think about what we've learned. VSQC seems to be a powerful blend of technical analysis, visual representation, and adaptive algorithms, all designed to help traders see the market differently.
It's about finding those hidden patterns and opportunities, but it's also about discipline and risk management. It's not magic, but it could be a powerful tool.
I agree. And there's still more to uncover. There's more code, more masterclass insights, and I'm curious to see where it leads.
Well, let's jump into the next part and see what other gems we can find in the world of VSQC. We've covered a lot, from candlestick patterns to the Hoffman inventory retracement bar. But there's one phrase in the masterclass that really stood out to me: trading like a complete idiot.
It does sound a bit strange, doesn't it? But it's a great way to cut through the noise and focus on what matters in trading.
I'm listening. What does trading like a complete idiot even mean?
It's about simplifying, getting back to basics. The masterclass emphasizes understanding market direction. It's simple, but a lot of traders get lost in the details and forget to ask, is the market going up, down, or sideways?
So before even looking at patterns, you need to figure out the overall direction.
Exactly. And those VSQC tools, the 200 cloud, the super trend, they can really help visualize market direction.
Makes sense. Once you have a feel for the trend, what's the next step in this idiot-proof approach?
The masterclass calls it identifying the picture of power. It's assessing the strength of the trend. You look at the relationship between price, the 20-period moving average, and the 200-period moving average.
How does VSQC help with that?
Remember those vivid green candles? Well, if they're closing above a rising super trend and the 200 cloud, that's a strong confirmation of a bullish picture of power. And vivid red candles closing below a falling super trend and 200 cloud suggest a bearish picture of power.
So it's like a checklist. You're looking for these specific things to line up before you trade.
Right. The trading like a complete idiot idea is about trusting your gut, but an informed gut trained to recognize these setups.
It seems like this approach could be helpful for traders who overthink things.
Absolutely. It's about stripping away the complexity and focusing on the core things that drive the market.
The masterclass also talks about patience. What does that mean in this context?
It means waiting for those ideal setups, not chasing price. Let the market come to you, like fishing. You find the spot where the fish are biting and you wait.
That's a great analogy. Patience is definitely important.
It is. And then when a good setup appears, you need to know how to manage the trade. The masterclass has guidance on that, covering things like stop losses, profit taking, and even adding to winners.
So it's a complete approach, not just entries and exits, but risk management and trade management too.
Exactly. It's about having a whole plan and being disciplined.
One thing that stood out to me is the focus on always learning.
Yeah, the masterclass really emphasizes that trading is a journey. Even if you master VSQC, there's always more to learn, new markets, new ways to improve.
So it's about having a growth mindset.
Absolutely. The document says traders should backtest their strategies, analyze their trades, and always look for an edge.
So for our listener, what are the key takeaways from VSQC?
I think the biggest takeaway is that VSQC is more than just an indicator. It's a way to understand the market. It's seeing price action in a new way, finding those hidden patterns. It's combining classic trading wisdom with modern tools.
And it's about that trading like a complete idiot idea, right?
Yeah.
Simplifying, trusting your gut, being patient.
Exactly. But it's also about discipline, managing risk, and always learning.
As we wrap up, one question comes to mind. If the market is always changing, can any system really solve it? Or is there always some unpredictability?
That's what makes the market so interesting. It's a challenge, a game of skill and strategy. VSQC can help you, but there are no guarantees.
So keep exploring, keep experimenting, and don't forget the power of simplicity.
Maybe someday you'll be the one sharing your own masterclass, teaching what you've learned.
That's a great thought. Thanks for joining us on this deep dive into VSQC. Hey there, welcome back to the Deep Dive. Today, we're going to be tackling the world of advanced trading.
Oh, nice.
Specifically, a system called Rubik's Algo.
Okay.
And its visual tool, the VSQC, or Volume Squeeze Candles Indicator.
Wow.
Now I know what you're thinking.
Yeah.
Rubik's Cube in trading. How does that even work?
Right.
Well, that's what we're here to uncover.
It's fascinating how seemingly unrelated concepts can intertwine, isn't it?
Yeah.
Think of it this way. Just as you need to understand the relationship between each face of the cube to solve it, VSQC shows you how volume, price, and candlestick patterns interact to reveal the market's true intention.
Okay, that's a pretty cool analogy.
Yeah.
So tell me more about this VSQC indicator. What makes it so special?
Imagine having X-ray vision for the market.
Okay.
You see not just price movements, but the raw power of volume driving them, the conviction behind every buy and sell. That's what VSQC aims to do. It combines volume analysis with classic candlestick charting, but with a twist. Think of it as color coding volume right on the price bars.
Oh, wow.
Green for buying pressure, red for selling.
Okay.
And the intensity of the color tells you how strong the trend is.
So if I see a bright green candle,
it
means strong buying.
Exactly.
And a pale green might mean the buyers are getting tired.
That's the idea.
Interesting.
It's like the candlesticks are talking to you, revealing the story behind the price action.
I like that.
But here's where it gets really interesting.
Okay.
This whole system is built around the philosophy of trading stupid.
Hold on. Trading stupid.
I know, right?
That doesn't sound very reassuring.
It's a counterintuitive approach, but it's not about throwing darts blindly. It's about recognizing the inherent randomness of the market and focusing on proven strategies rather than trying to outsmart everyone else.
So it's about playing the odds like a skilled blackjack player.
Exactly.
Understanding the probabilities and making calculated bets.
Precisely. And VSQC gives you the edge by highlighting those high probability setups where the odds are in your favor.
Okay.
For instance, imagine seeing a deliberation pattern, that series of small candles we talked about earlier, forming near a key support level.
Okay.
If this pattern is confirmed by increasing volume and a shift in VSQC colors from red to green, that's a high probability setup you can leverage.
That makes sense.
Yeah.
Instead of trying to predict every little move,
we're
looking for those specific situations.
Exactly.
Where the evidence suggests a higher chance of success.
Exactly. And that's where the power of volume comes in.
Right.
It's the fuel behind price movements.
Okay.
Think of it as the roar of the trading floor.
Gotcha.
High volume tells you there's real conviction behind a move, while low volume might signal a trend is running out of steam.
So we're not just looking at price patterns, but also the volume that validates those patterns.
Yeah.
It's like confirming that the story the candlesticks are telling is actually backed up by real action.
And VSQC doesn't stop there.
Okay.
This system draws inspiration from some of the greatest trading minds like Oliver Velez and Robert Hoffman.
Oh, wow. So it's like having a team of expert coaches built right into the indicator.
Exactly.
Helping you see the market through their eyes.
Right. You could say that.
Interesting.
Velez, for example, focuses on identifying institutional money flow.
Oh.
Those big players that often drive the most significant market moves.
Right.
VSQC enhances this by highlighting the power bars.
Okay.
Candles with huge volume and strong price movement that often signal institutional activity.
So we're not just trading against other retail traders. We're looking to identify and align ourselves with the moves of the big players, the market makers.
Exactly.
That's smart.
Now, some traders might argue that relying solely on volume can be risky.
Okay.
As it doesn't tell you the direction of the move.
Right.
But remember, we're using volume in conjunction with other factors. Yeah. Like candlestick pattern support and resistance levels and overall market trends. It's about putting together the pieces of the puzzle. Not relying on a single element.
That makes a lot of sense.
Yeah.
So how does Robert Hoffman's approach fit into this system?
Hoffman's strategy revolves around inventory retracement bars, or IRBs.
Okay.
These are specific candlestick formations that suggest a trend might continue. Think of them as pauses for breath before the trend resumes its course.
Gotcha.
VSQC doesn't plot the IRBs directly, but it helps you visually identify potential setups based on his principles.
Okay.
It's like having a co-pilot pointing out those formations as they emerge on the chart.
Okay, so VSQC is helping us spot those high probability setups.
Yes.
that align with proven strategies by trading masters.
Exactly.
And it does all this while incorporating volume analysis directly on the candlesticks.
Precisely.
Wow, this is pretty powerful stuff.
And there's even more to it than meets the eye. Remember the Rubik's Cube analogy?
Yeah.
Well, VSQC's dynamic adjustments are also inspired by the logic of solving the puzzle.
Okay.
Each move influences the next.
Right.
It uses a dynamic moving average that adapts to market volatility.
Interesting.
Similar to how a blackjack card counter adjusts their bets as the odds shift.
That's fascinating.
Yeah.
So it's not just a static set of rules.
No.
It's a system that adapts and evolves with the market.
Exactly.
Wow.
Just as a Rubik's Cube has a finite number of permutations,
Okay.
market patterns, especially those influenced by market makers, tend to repeat.
Right.
VSQC analyzes these patterns,
Okay.
looking for those that historically lead to profitable trades.
Interesting.
It's like having a historical database of market behavior that helps you anticipate the most likely outcomes.
That's really cool.
Yeah.
I like that a lot.
It's powerful stuff.
Yeah, it is.
Welcome back to our deep dive into advanced trading with Rubik's Algo and the VSQC indicator.
So we're picking up where we left off.
Yeah.
Exploring this unique system
Right.
that blends market dynamics, volume analysis, and that intriguing trading stupid philosophy.
Today, we're going beyond the basics to discover some of the hidden gems within this powerful trading framework.
All right, let's dig in.
Okay.
In part one, we talked about the VSQC candlestick database, a library of patterns enhanced by volume analysis.
Right.
But how do we actually use this in real-time trading?
That's where trading stupid really shines.
Okay.
Remember, it's not about predicting the future with absolute certainty,
Right.
but about playing the odds like a skilled poker player.
Right. We're looking for those situations where we have an edge,
Exactly.
where the probabilities are tilted in our favor.
Exactly. And the VSQC candlestick database helps us spot those high probability setups.
Okay.
Let's say you see that deliberation pattern near a key support level, that cluster of small candles after a big move.
Okay.
It's like the market is pausing for breath. Now, if that pattern is accompanied by increasing volume and those VSQC colors shifting from red to green.
That's a sign the buyers are stepping in.
Yeah.
And the trend might be about to resume.
Precisely. But we don't trade patterns in isolation.
Right.
We need to consider the context,
Okay.
the overall market environment, just as a single twist on a Rubik's Cube affects the entire puzzle.
Okay.
A candlestick pattern only reveals its true meaning in relation to the bigger picture.
So we're looking for confluence. Multiple factors aligning to increase the probability of a successful trade.
Exactly.
It's like checking the weather forecast, the traffic report, and your car's fuel gauge before embarking on a road trip.
I like that analogy.
Yeah.
We're looking for a chorus of signals singing the same tune, not just a solo act.
I like that.
And of course, volume is the lead singer in this chorus.
Right. VSQC brings this volume story to life visually,
Yeah.
showing us the strength of buying or selling pressure right in the
Yes.
candlesticks.
So if we see that breakaway pattern, that bullish reversal after a series of red candles, we want to make sure the breakout candle has strong volume and a vivid green color.
Okay.
That tells us there's a real conviction behind the move.
It's like making sure the engine is roaring before you hit the gas pedal.
Exactly. And speaking of conviction, let's talk about how VSQC helps us identify when the smart money, the market makers, are stepping in.
Now, this is where it gets really interesting.
Yeah.
We talked earlier about aligning ourselves with the big players.
Right.
But how do we actually see what they're doing?
One clue is to watch for sudden spikes in volume,
Okay.
especially when they coincide with strong price moves. These surges often signal that institutions are entering or exiting positions.
So those vivid green or red candles that VSQC highlights are like flashing neon signs,
Exactly.
pointing us towards market maker activity.
Precisely, remember those power bars we mentioned earlier. They're often a sign that the big players are making their presence known.
Okay, so we're starting to see the footprints of the market makers.
Right.
But if they're so smart, why would they leave these obvious trails for us to follow?
Well, they can't hide everything.
Sure.
They need to move massive amounts of capital, and that inevitably leaves traces.
Okay.
It's like trying to steer a giant ship. It takes time and effort to change course.
Right.
And that creates ripples that we can detect.
So it's like a game of cat and mouse,
Yeah.
with the market makers trying to disguise their movements
Right.
and retail traders like us trying to decipher them.
And VSQC gives us a powerful magnifying glass to help us spot those clues.
Okay.
But remember, Trading stupid is not about outsmarting the market makers.
Right.
It's about understanding their behavior and leveraging it to our advantage.
So it's not about fighting against the tide.
Exactly.
It's about learning to surf it.
That's a great way to put it.
Okay.
We're looking for opportunities to ride the waves that the market makers create.
Okay, so we're learning to recognize the signs of market maker activity. What's the next step? How do we actually align our trades with their moves?
One strategy is to look for pullbacks after a strong move driven by market makers.
So if we see a stock price surge higher on huge volume,
Yeah.
we don't chase the price.
Right.
We wait for it to dip back down a bit before entering.
Exactly. That pullback often provides a lower risk entry point,
Okay.
as some of the initial euphoria has subsided.
And VSQC can help us confirm that the pullback is genuine and not just a trap.
Precisely, the color gradients can show us if the pullback is accompanied by weakening volume and fading momentum.
Okay.
That suggests the market makers might be accumulating shares at those lower prices,
Right.
like a whale scooping up krill before continuing its journey.
I see what you mean. We're looking for a shift in the color and intensity of the VSQC candles,
Exactly.
indicating a potential change in the balance of power.
Exactly. And we can also use the Hoffman IRB strategy to confirm potential trend continuations after these pullbacks.
So we've got multiple tools at our disposal. Candlestick patterns, volume analysis, and even these advanced IRB concepts.
It's like we're learning to speak the market's secret language.
And the more fluent we become in that language, the better we can navigate its twists and turns.
Exactly.
But I have to admit, all this analysis can feel overwhelming at times.
Sure.
There's so much to consider.
That's a common feeling, especially for those who are new to this approach.
Okay.
But remember, trading stupid is about simplifying the process, focusing on what truly matters.
So how do we avoid getting bogged down in analysis paralysis?
One way is to start with a clean chart.
Okay.
Don't clutter it with dozens of indicators.
Right.
Focus on the essentials, the VSQC indicator, the super trend,
Mm-hmm.
and perhaps one or two other tools that resonate with your trading style.
So it's about finding that sweet spot between having enough information to make informed decisions and avoiding information overload.
Exactly. And remember, trading stupid is also about accepting that you won't win every trade.
That's a tough pill to swallow for many traders. We all want to be right all the time.
Of course. But the market is a humbling teacher.
Right.
The goal is not to win every battle,
Okay.
but to win the war.
Mm-hmm.
We're aiming to make more on our winning trades than we lose on our losing trades.
It's like playing a long game of chess where each move contributes to the overall strategy,
Right.
even if some moves result in setbacks.
And just as a Rubik's Cube solver anticipates how each twist affects the overall pattern,
Okay.
a skilled trader anticipates how market conditions influence price movements.
Okay, that makes sense. So we're aligning our trades with market makers,
Yeah.
managing our risk, and using the VSQC candlestick database to identify high probability setups.
Right.
What other hidden gems are lurking within this system?
One of the most intriguing aspects is its connection to Ichimoku Kinko-hyo,
Okay.
that ancient Japanese charting technique we mentioned earlier.
I have to admit, the Ichimoku cloud still feels like a mystical enigma to me.
It is complex. But what's remarkable is that VSQC incorporates the essence of Ichimoku without actually plotting those intricate lines and clouds on the chart.
Wait, so we're getting the benefits of Ichimoku without the visual clutter.
Yes.
How does that work?
VSQC uses the underlying mathematical principles of Ichimoku, those specific numbers and ratios, to inform its calculations and analysis.
Okay.
It's like having a secret weapon hidden beneath the surface of the indicator.
Okay, so it's adding another layer of analysis without overwhelming the chart with visual noise.
Precisely. Just as the Rubik's Cube and Ichimoku share a system of dynamic relationships, VSQC's dynamic adjustments are also inspired by this concept.
So it's all connected.
It is.
It's like we're peeling back the layers of an onion, revealing deeper and deeper levels of complexity and interconnectedness.
Right.
But how does this Ichimoku connection actually play out in practice?
Okay.
Can you give us an example?
One way VSQC leverages Ichimoku is by incorporating the concept of time and price squares,
Okay.
which are specific areas on the chart where price and time converge. These squares often act as magnets for price action,
Right.
similar to support and resistance levels.
So VSQC might highlight these time and price squares,
Yes.
giving us a heads up about potential turning points or areas where the market might consolidate.
Exactly. And by combining this knowledge with other VSQC signals,
Okay.
like volume spikes or candlestick patterns,
Uh-huh.
we can gain a deeper understanding of the forces at play and make more informed trading decisions.
This is fascinating. It's like having a sixth sense for the market, seeing things that others might miss.
It can be, yeah.
But I have to admit, this level of analysis can still feel intimidating at times.
Sure.
Is this system only for experienced traders?
Not at all.
Okay.
Remember, VSQC is designed to simplify complex data, making it accessible to traders of all levels.
Right.
It's like having a personal trading coach guiding you every step of the way.
So even someone who's relatively new to trading can use VSQC effectively.
Absolutely. The key is to start with the basics and gradually build your knowledge and experience. The VSQC Masterclass materials provide a comprehensive guide to the system.
Right.
And there's a vibrant community of traders who are always willing to share their insights and experiences.
That's reassuring to hear.
Yeah.
It sounds like there's a supportive network to help traders navigate the learning curve.
Precisely. And remember, trading stupid is not about being a genius.
Okay.
It's about being a disciplined and patient student of the market.
Right.
It's about recognizing that there's always more to learn and that even the most experienced traders can benefit from this approach.
That's a great perspective. So we've talked about aligning ourselves with market makers, mastering volume analysis, simplifying our charts, and even leveraging the wisdom of Ichimoku.
Right.
What else can we do to enhance our trading stupid game?
Well, one area we haven't touched on yet is risk management.
Ah, yes. The crucial but often overlooked aspect of trading.
Exactly. Even with the best tools and strategies,
Right.
if we don't manage our risk effectively, we can quickly wipe out our profits.
Right.
And that's definitely not trading stupid.
So how does VSQC help us protect our capital?
One of the most powerful features of VSQC is its integration of stop-loss orders.
Okay.
These are orders that automatically exit a trade.
Right.
If the price moves against you by a certain amount,
Okay.
think of them as safety nets that limit your potential losses.
So it's like setting boundaries for each trade,
Exactly.
knowing that we'll only risk a predetermined amount of capital.
Precisely. And VSQC makes it easy to place these stop-loss orders.
Okay.
You can set them based on a percentage of your account balance, a specific price level, or even a combination of factors.
And I'm guessing VSQC also helps with profit taking.
Absolutely. You can set profit targets using similar methods as stop-loss orders,
Okay.
ensuring that you lock in profits when the market moves in your favor.
So it's like having an automated trading assistant helping you manage both risk and reward.
You could say that, but remember,
Yeah.
just as with any trading system, discipline is key. It's tempting to move your stop-loss orders further away from the entry price to avoid getting stopped out,
Right.
but that can also increase your risk.
Yeah.
It's like loosening your seatbelt because you think the drive will be smooth.
Uh-huh.
You might get away with it sometimes, but eventually it's going to backfire.
Right. We need to stick to our plan.
Yeah,
Trust the system and let the stop loss orders do their job.
precisely. Trading stupid means managing risk like a pro, even when it feels uncomfortable.
Okay. So we've covered the importance of volume, the VSQC candlestick database, risk management, and avoiding analysis paralysis.
Right.
What other hidden gems are lurking within the VSQC system?
Well, there are a few more advanced techniques we can explore,
Okay.
but I think we need to take a break and let our listeners digest all this incredible information.
Agreed. There's a lot to unpack here, but it's all starting to come together.
It is
Join us for part 3 of this deep dive, where we'll delve into even more advanced trading strategies and psychological insights to help you truly master the art of trading stupid. Welcome back to the deep dive. We're wrapping up our exploration of Rubik's Algo and the VSQC indicator.
Yeah.
Diving into those advanced tactics
Right.
and psychological edges that can make all the difference.
That's right. It's about moving beyond just recognizing patterns and signals
Right.
to truly grasping the game within the market.
Okay, I'm ready to level up.
Right.
In part 2, we talked about aligning ourselves with those market-making giants.
Uh-huh.
But how do we avoid their traps?
Right.
They're not exactly playing fair, right?
That's where understanding liquidity zones comes in.
Okay.
Think of them like honeypots for big traders.
All right.
Areas on the chart where major orders are likely to cluster
Okay.
around support and resistance levels,
Uh-huh.
previous highs and lows, even round numbers.
So these zones attract both buyers and sellers,
Yeah.
creating a lot of activity, but also a lot of potential danger.
Exactly. Market makers often use these zones to their advantage,
Okay.
manipulating price to trigger stop-loss orders or create a cascade of buying or selling.
Right.
It's like setting a trap in the jungle,
Okay.
where the animals are likely to go. So you place your snare accordingly.
Okay. I'm starting to see how this works, but how do we avoid getting caught in those traps?
Right.
How do we tell the difference between a genuine breakout and a manipulative fake out.
VSQC can be incredibly helpful here.
Okay.
Remember, volume is key.
Right.
A genuine breakout is usually accompanied by a surge in volume and a bright, bold color in those VSQC candles.
Okay.
It's like a roaring crowd cheering the price higher.
Yeah.
That's conviction.
So if we see a breakout with low volume and weak VSQC colors,
Yeah.
it's like a half-hearted golf clap. Something's not quite right.
Exactly. It's like a detective noticing a forced entry with no signs of a struggle.
Right. Something's fishy. This is making me think of that analytical observer personality we talked about earlier.
Yeah.
They might get stuck overthinking these situations.
Right.
VSQC helps by providing those clear visual cues so you can act decisively when the time is right.
That's a great point. The system helps bridge the gap between analysis and action.
Yeah.
But there's another type of trap we need to watch out for, the dead cat bounce.
Okay.
It happens when the price takes a nosedive, then bounces back a little, making you think reversal is coming.
So it's like the market's playing possum, luring you into a false sense of security.
Precisely, inexperienced traders often get caught buying in too early.
Right.
But remember, volume is the truth teller.
Right.
A true reversal usually has rising volume, and those VSQC colors flipping from red to green.
So we're using VSQC volume and even our understanding of trader psychology to avoid those pitfalls.
Exactly.
What other techniques can help us level up our trading stupid approach?
One powerful but often overlooked tool is order flow analysis.
Okay.
It's like looking under the hood of the market,
Right.
seeing the actual buy and sell orders flowing through.
Wait, we can actually see who's buying and selling.
Yeah.
How is that even possible?
There are specialized platforms that provide this data, often called depth of market or level 2 data.
Okay.
Imagine you can see all the bids and offers lined up like an auction in real time.
So if we see a massive wall of buy orders at a certain price, it's a sign of strong support, like a fortress guarding that level.
Exactly. And conversely, a ton of sell orders piling up suggests strong resistance, like a ceiling preventing the price from going higher.
Wow, it's like gaining access to insider information.
It can feel that way.
But isn't this a bit complicated?
It can seem daunting at first.
Right.
But remember, trading stupid is all about using tools that simplify complex data.
Okay.
You don't need to become an order flow expert overnight.
Right.
Even a basic understanding can give you a significant edge.
So it's another layer we can add to our VSQC analysis.
Exactly.
Helping us see the market with even greater clarity.
Precisely. And now there's one more crucial aspect we need to discuss. And it's not about indicators or chart patterns.
Right.
It's about something much deeper, your mindset.
Ah, yes. The mental game of trading.
Right.
We can have all the fancy tools in the world, but if our heads aren't in the right place, we're doomed.
Exactly. Trading stupid isn't just about strategies.
Right.
It's a philosophy.
Okay.
It's about accepting the market's inherent randomness. We can't control everything.
Right.
But we can control our risk, our emotions, our decisions.
It's about being humble, recognizing we won't win every trade, but aiming to win over the long haul.
Precisely. It's about accepting losses as part of the game.
Right.
Learning from them and constantly improving.
So it's like mastering the Rubik's Cube. You might get frustrated at times, make mistakes,
Right.
but with practice and perseverance, you learn the patterns, the algorithms, and eventually you solve the puzzle.
That's a perfect analogy. And just as you wouldn't expect to solve the Rubik's Cube on your first try, you shouldn't expect to become a master trader overnight. It takes time, dedication, and a willingness to embrace the trading stupid philosophy.
This has been an incredible journey. We've gone from the basics of VSQC to advanced techniques like order flow analysis, all while emphasizing the importance of risk management and mindset. What a deep dive.
We've only scratched the surface.
Right.
But hopefully we've given our listeners a solid foundation for understanding this powerful approach to trading.
So for those ready to explore further, where should they start?
Dive into the VSQC masterclass materials.
Okay.
Connect with other traders using the system and never stop learning and refining your approach.
Great advice. And on that note, we'll wrap up this deep dive into the world of Rubik's Algo and the VSQC indicator.
Sounds good.
Remember, trade stupid, but trade smart.
Yeah.
Thanks for joining us.